did silver outperform gold? And my answer is yes, and this is what we're going to do here. In percentage, we're going to measure from this trough to this high, and what was the percentage gain here. In every major crisis, precious metals always perform exceptionally well compared to many other markets. And in fact, I believe that many of us may have missed this observation. Between silver and gold, silver outperformed gold in those crises. And this was the last inflation crisis in the 80s, as we could see here. And this was the aftermath of the '08 crisis. And in today's tutorial, we will do the math of why silver has outperformed gold each time. And this is what we're going to discuss today, just one segment. We're going to study into the price behavior of both gold and silver, leading into each peak in the 80s and the '08 crisis. And also, how about right now? Is there any development that is leading into any potential rally ahead? And some of you may ask me, what exactly is price behavior study? Now, it provides us a fundamental reason for every price movement, especially those significant ones. And we are going to study into that. But before that, let's take some time to read into the disclaimer down here. Let's study into its price behavior before leading into the each crisis in the 80s and the '08. And now, before the peak of each crisis, there's some interesting behavior here is that, let me just demonstrate to you. There is what they call the first wave, followed by an impulse move. Now, for silver, the first wave, you could see that from this trough, it moved up and it kind of rests here. And that's why I call the first wave. And then followed by an impulse move. So is for the gold as well. If I could go back to before, just before 1974, we could see that the gold from this low, it went up to the small little peak here before it rests, and that's why I call it first wave. So gold has that as well, and it rested at the trough here before it go for an impulse move. That's for the gold. That's why I call it impulse move. And then '08, before this crisis or the impulse move, there was also the first wave for the silver, and silver you could see is much more obvious. That's why I call the first wave, and followed by an impulse move. It's just so interesting, isn't it? Okay, how about the gold? It is the same as well. Because of the '08 crisis, there was this first wave. There's some change in the fundamental, and then leading into an impulse move here. That was during the '08. Now, the next thing I think I'm very interested to study into is the price behavior of silver, because the topic here is that the silver is more precious than gold. So in terms of percentage gain, impulse move over the last two crises, did silver outperform gold? And my answer is yes, and this is what we're going to do here. In percentage, we're going to measure from this trough to this high, and what was the percentage gain here. That we could see that it was about close to about 1000% gain from this trough to this high. Now, in the same period for gold, and we're going to measure that. Maybe I'm just going to expand this a little bit. Yeah. Okay. And from this trough to this peak, I hope I get this correct. We could see that it was up 754%. So comparing the silver gain and the gold gain, silver is a winner at 994. Now, how about for this, as it rested at the trough of the first wave, and this is where I count. Yeah, from this trough to the peak here for silver, what is its performance now? And I believe there's an auto snap function. It was up 462%, as we could see. Now for gold, now the trough started here, and I'm going to do auto snap. It was a gain of 180% compared to silver is 462%. And so I would say that silver, in every crisis, I love both gold and silver, but I just felt that in every crisis, based on this observation, silver outperformed the gold market. Now, so where's the opportunity moving forward right now? And this is what I see, what I observe here is that seems to me that there was a first wave already developed. Now, let's look at the silver. Now, this was the first wave. And of course, to match out with the fundamental, and what could be the fundamental reason, it is the COVID-19 that happened over the last 2.5 years. Now, could it be a disruptive fundamentals that have caused a shift to its impulse move gradually? And I would say that yes, it had kind of disrupted the inflation that the global is experiencing right now. Now, so, and if you look at the past history, before any impulse move, there's always a fundamental reason, and that's what I call the first wave. We try to read beyond just technical, what could be the fundamental reason that caused the first wave, and if this is going to lead to an impulse move. And that's what I see for silver. And of course, gold, the first wave, it is this. Yeah, so that's the first wave. All right. Now, so between investment and trading the precious metal, if you are with me, that I'm seeing that silver and gold and a lot of commodities, given time, will continue to appreciate because of inflation. And as an investor, I have invested in the physical gold, physical silver as well, and physical silver is really heavy. And of course, I buy some paper investment, for example, like funds, that's unit trust, ETF, and also there's one more thing that and mining company as well. So I buy into those, especially those that pay dividends. Then how about if you're going to trade the market? Now, if I were to trade the market, I will trade into the derivatives. Say, for example, I'm quite convinced that the trend is set. It kind of, what we study here is that the first wave is kind of settled, and perhaps moving forward, we're moving into an uptrend. Now, this is what I'm going to do here. I'm going to switch to a daily chart for the silver. And let me see if I can move into the daily chart. Now, this is a daily chart. I'm going to expand this a little bit, or maybe I'll just keep both gold and silver as a point of reference. Now, so what I saw here is that if you refer back to my past videos, that we have discussed how to construct a classic uptrend line. So basically the rule is you try to find at least three significant trough, and then you try to find the best fit. And we could see that there were at least 1, 2, 3, 4. Now there's 4 significant trough that I will buy on dips. And micro, the minimum fluctuation, it states that for every half a cent movement, that's the minimum movement that they have, is $5. So it means that every 1 cent movement is 10, and 10 cents movement is 100, and $1 movement, it represents 1,000. Why is it important? Because as a steward of a trader, being a good trader, I have to know that if $1 is against me, how much is it going to cost me? Or $1 is with me, how much am I making? The profit and loss, I have to know that. I've included some of my past video tutorials relating to today's discussion, and its links below. So keep watching it again and again. You too can get into the market with greater precision. And always enjoy studying the correlation between the markets. And I hope that today's sharing will be helpful in how we invest and trade. Really happy that you stayed through this video. You have many great trading weeks ahead.